What's up, everybody, and welcome to the Confluence VC podcast. This show is meant to give you a personal glimpse of the next era of investors and operators. For our first guest, we had on Mike MacCombie, who works as the director of platform at FF Venture Capital up in New York. Mike is a self-proclaimed community geek, and within his role at FFVC, he focuses on accelerating the growth of portfolio companies, spending most of his time on business development, founder best practice advisement, hiring, and later stage fundraising. Outside of work, Mike acts as a mentor for Techstars NYC and Quake Capital, and he also authors the Investor GAN newsletter from FFVC. In this talk, we asked Mike about his path into venture, why more firms are positioning themselves as platforms, and his secrets on effective platform strategies.
Thanks for being on. Clay, you want to run it up or how you want to do it?
Yeah, sure. So I guess for quick context, can introduce ourselves first. So my name is Clay Norris. I'm a VC at Mucker Capital. Also on the phone is Tyler Dean, who is associate partner at Great Point Ventures. We're co-founders of Confluence VC, which is meant to be a shared workspace for only VCs, meant to empower and connect the next era of investors and operators. We've been really slow in launching this content strategy. We wanted to be thoughtful, bring on interesting members of the Confluence community to give tactical advice into their experience of breaking into venture, and then some of the main lessons they've had along the way. So that being said, wanted to first bring on you because we thought you had a very interesting background, but then also bring on you because we wanted to reward you for all the referrals we got for featuring us in the GAN newsletter a couple weeks ago. We track referrals. I think as of the start of this call, you're up to 34 members of Confluence that are directly attributed to you. So thank you for that.
Cool. Cool. Glad I could be of value.
Yeah, absolutely. Yeah, kind of just want to casual conversation. I know we sent over a couple questions for you to prep, but I guess just to kick things off, would love to hear more about your path to the current role, and then some of the main learnings you've had along the way.
Yeah, so I took a pretty untraditional path to get into VC. Coming out of college, I ended up doing Teach for America for 2 years in the South Bronx neighborhoods. And then I did teaching for 2 more years, basically because I wanted to get even better at what I was doing. I actually feel like I had some professional competence. And so I did 2 more years teaching in South Harlem and West Harlem in New York. And then I left teaching after I had gone to a pitch or a startup launch event for this company called Planted, if I recall correctly, in sort of the career finding HR tech space. And I met people that I hadn't seen people this creative since my years in college when I was working at a startup for an internship. And I missed all the intellectual stimulation and all of the creativity where they were just showing me the things they were working on. And I said, okay, I need to get back into it. I applied to a few different startups, didn't get a job at any of them. I applied to Via, I applied to Diet Bet. I think there was a few others. My brother had been a founder, so I knew how much it took to work at a startup, and I didn't want to join one where I didn't feel I was like completely all in. And so I ended up, instead of working with one, I worked with many. I started off going to a bunch of hackathons and impromptu pitch competitions, and I won a few. And some founders started approaching me for help with their pitch decks because they saw what I could do. I ended up working with a few and began consulting with startups, going from fundraising decks to fundraising strategy, go-to-market strategy, anything where it involved a story or psychology, I got involved in. Then eventually moved into user experience and sort of working from it. And this happened in part because at the same time I was working as a behavior science consultant, sort of downloading as much as I could about applied behavior science research and saying, how does that translate into loyalty programs, referral programs, communities, events, experiences for larger companies, F500, sports leagues, tech conferences, things like that. And so I was working to sort of hustle and make some money doing that, working with startups. And I did that for probably a good year or so. And then I ended up at the 2016 elections. I got really geeky about communities because I said, I think that's one thing that I have a space that I know well. So I started basically launching communities for 3 months. Every other week I launched a new one. And so one of them was the Alma Mater Investment Group for Brown University. One of them was a community for URM founders. And another was a community that I specifically focus on curating people around personality. those communities grew, especially the personality focused curation community and the investment group. And in 2017, the fund that I now work at was looking for somebody who had a combination of investing experience and community building experience. And I managed to apply there a week before they were going to post a public job opening, and I got hired within a week. So that was my path in. In terms of lessons learned from that, I think there's a few. One is apply for the job, even if it's not posted, if you want it. Oftentimes there are people that are open to roles. There are people, I know so many people that have gone to a startup founder and said, hey, here's a role that you need and here's why. And they end up doing it. I have a friend who worked at X.AI doing that, and others. And so I applied for this role. I said, hey, I could be a community builder in residence or something a month before they needed me.
Hey, your current fund.
What?
Hey, your current fund.
Yeah. So I
Wow.
said, like, look, I'll help out. I'll work with you on something. And then it turns out the person who had my role had gone on to, I think, work at Capital One or something, so they needed to fill it. So I think people underestimate the amount of agency they have to create a role, to find the roles that aren't available. So usually if it's publicly posted, you're going to have 300, 400 other applicants that have already applied to it. You have to compete against them. Versus if you find a way to get your application or your interest understood before they even have a process, in the mind of the people that are hiring, saying, do they want this one person or do they want to go through a whole process to find someone else? Hiring is no easy task ever. And so sometimes you're doing them a favor if you apply when they don't need somebody, because then they don't have to go through the hiring work. That's it. That's like the number one lesson I learned from that. I think something else I've learned is after all the jobs I've worked, choose your boss more than your first job. The amount of learning you'll get from that person, the amount of best practices, the amount of culture building, it makes a huge difference. I think most, and intentionally as well, is the kind of people you surround yourself with. Some of the most successful people I know now were some of the first people I met, and I just decided to hold on to the relationships and get to know them better, purely because I could tell they were something special. One of them is this guy, Keenan Williams, who went through the YC Series A batch recently with a company called Resi, R-E-Z-I, not R-E-S-Y. He and I met at a pitch competition back in the day, and he's the first person that I said, oh, this guy could beat me as much as I could beat him. And we've been friends ever since. And it's like when he was starting off. So yeah, those are some initial lessons. I'm sure there's more, but I can go into that as needed.
For sure.
No, I mean, I think Tyler and I had pretty similar experiences breaking in. I think Tyler probably holds the record for most venture experiences before graduating college and just trying to position himself into these roles so that he takes a lot of the load off in the hiring process.
Yeah.
Yeah, there's systems. I like do these pay it forward calls every Friday morning with people trying to break in a venture or founders who are pre-seed trying to figure it out. And what I always say is like systematize your game. Like make a hit list of funds who may be raising, may not be raising, may know someone who's raising, and be helpful to them. So like tell them what you're good at. Send them 10 deals, send them like a deal sheet, send them 20 facts about you, and then say, I'm looking for this, 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 or this, right? Like I would say, like, I'm looking for projects, I'm looking for jobs, I'm looking for internships, or, just to get to know you, because that's what's most important. And then do that 100 times a week. I ended up getting like five different VC experiences before I graduated college. And I think the magic that you spoke of, I didn't even think about was the stat of if you create the opportunity yourself, you're competing against you and your ability to convince someone versus an application you're competing against everyone else, plus whoever the recruiter brings, so you got nepotism going against you, you got recruiters, you got online applications versus just trying to pitch somebody on an idea.
Yeah, exactly. Because it's VCs, when they're looking at deals, it's not that you're competing against yourself, you're competing against all the other deals that they have in their pipeline. Like it's you versus the 50 that you have there versus if you get to another or something like that. So totally.
Exactly. Yeah. But yo, can you tell us about platform? We think that platform is really important. It's becoming increasingly important in venture because everybody has fire partners. So people are starting to rely more and more on actual strategies, edge, platform being a key component of both of those. I know that was huge for me at Point 72. We literally spent like I can't say the number, but a lot of money on the platform. and,
Yeah.
and you killed it along with your newsletter. So having you speak on that would be phenomenal.
Yeah. I mean, it used to be, I think probably 4 years ago, it was maybe 50 funds that had people in platform. Then it's been doubling or something like that ever since. I think we're up to the VC platform community is 881 members last time I checked last week. So that's, I would say, let's say, imagine there's 2 to 3 people per fund. There's at least 300 funds, if not 500 funds that have people in platform roles. I think part of it is that's become table stakes for founders because they want you to add something besides money. Money's become relatively commoditized. But at the same time, it's referent power and sort of saying, what kind of relationships can you build and just being helpful? Honestly, I don't think a lot of platform teams do a ton. I mean, unless you have like a full 4-person team, 5-person team. But I think also platform is seen as 2 things now. It used to be, what are we going to do to help our companies once they are invested in? I think a lot of platform teams have become deal sourcing mechanisms as well.
Yep.
I put out a lot of my events with founders ahead of time to say, look, this is who we are. This is how we're helpful. So I think a lot of people saw platform back in the day as being, we'll help you once we invest. Like, no, we're trying to find the people that we want to invest in and show you why we can do that. I think the third thing is a lot of funds, some partners are stretched and they're looking for leverage and opportunities to be helpful beyond the board seat. And sometimes they just need somebody who's going to coordinate his operations. So I think it's all those things. It's hard to become sort of in the power law, like the top decile of platform helpfulness. Like First Round's got it set. I would say First Mark has done a great job when it comes to platform, whether it's corporate development talent. They're literally hiring people to provide leverage to people who time is for them just worth way more in terms of what they can do for their company.
Is it First Mark that's being built right now?
Yeah, I think First Mark have the guilds. I don't know as much about it just because it's an internal thing. One differentiator that we have for us is that none of our events are exclusive to our founders. It's as much for the outer community as it is internally. And so we say this is about building community, whether or not you're part of us. And that's one of the things that I think helps us with the deal sourcing side as much as it is the value add. But also, depending on the size of your team and your resources, we run lean. I'm a 1-person team. I've been that way for 3 years. And, this year I put on 300 events, I think will be my ending number. And so it's like, yeah.
You just are you doing this like on a daily basis or something? Like, what do you?
I'm hosting 6 events a week. So like yesterday I hosted 2 roundtables on go-to-market strategy and I think customer success. Today was productivity. Tomorrow is sales and data science.
Yo, respect to your fun, but come get poached. What are you saying? You're doing a event. Hey, come on.
I mean, there's some things I've learned. I think one thing that people need to learn is like, how do you build flywheels for what you're doing? If I had to do one of these events from scratch, I wouldn't be able to do it, but I do these on a monthly recurring basis. I've got the same population and it expands a little bit every time. Like a community is not just one event. Like you got to be able to do it repetitively. If I'm doing like a random webinar every time and getting new people, yeah, it'd be terrible. But we found a process that works, it's repeatable and it's leverageable. But yeah, in terms of coaching,
you use this as a chance for you to just talk about some of the events, even to get some of the people on here to maybe start attending. Ooh.
Yeah, I mean, so as a breather, I listen to podcasts on the anti-pattern. I see so many events for webinars, passive listening events where 2 people are talking on a screen, and after an hour, I want to take a nap or I want to turn off. It's not that the people are bad; it's just the experience is so removed for me, and I'm not participating. I also recognize that we had a lot of founders that were looking for places to learn. So I said, instead of waiting in line, a virtual line, ask a question at Q&A, or to be on an over-inundated Google group or Slack group, let's just have a monthly recurring pure best practices group meeting where you can talk about things, clear some questions, and have a space to talk through the needs you've got. And so a lot of the events we do, we're doing 18 a month, are pure best practice communities ranging from pricing strategy, data science, go-to-market sales, hiring, product engineering, et cetera. And these are communities that are roughly on average about 70 people per community right now, some as large as 130, like our CTO group. And so these are growing communities that keep getting larger and larger every time instead of being a one-off event that you have to rinse and repeat without any assets or community already built in. It was slow to start, but yeah. So that's one, is I say, look, pure best practice groups. We do vulnerability breakfasts for a lot of our Founders, I give them a place to sort of talk on the emotional, empathic side as well. And so that's a majority of what I do in terms of the events. We do others on occasion, VC-focused sourcing events or branding events. I do this one for VCs called a welcome wagon, where if there's a VC new to the ecosystem, I say, hey, look, you want to meet some VCs kind of in an efficient way? I'll put together an event for you, bring 10 to 12 VCs in, they'll get to meet you, you'll get to meet them, and it just gives you some roots to get an event from. And he met 12 VCs in a matter of an hour. I said, great, meet some folks, build some connection. So those are some of the events that we do. All of it's community-based, it's not one-off. A lot of them build off of each other. And then we have those events, everyone who goes to say, look, if you want to get my weekly email, go ahead. And it's my way of building a distribution that makes it easier and easier. It's kind of a economies of scale for me. The more people on my list, the easier it is to fill events, the more people on my list.
How have you felt that? And also, Clay, feel free to chime in. Go for that. You're okay.
Okay. So, yeah, one of the questions that I was going to have as a follow-up. So I'm understanding the flywheel. Seems like it starts with more subscribers to the GAN newsletter. Aside from newsletter subscriptions, members in these separate communities, and then engagement once they are in the communities, are there a different set of metrics that you're tracking to kind of judge the health of these different community networks?
Yeah, I mean, it's always the best things. Like, what are the KPIs for platform, the KPIs for community? I mean, if I find that I can't keep filling an event that people don't want to come back again, that's a big sign that, okay, we need to change something up. It's sort of an organic feel of, am I facing more headwind or tailwind for doing a new event? If I invite the same people back, do I get interest or not? But I also look, I built a whole triangle of KPIs saying, look, our goal is to make money for the fund, for the LPs. What contributes to that is we have great founders and we have great exits from those founders. What contributes to that? We have great referrals, we have great contacts, we have great ability to sell ourselves in a deal. What makes it a great exit? We help them get revenue, we help them get value, we help them save time. So it's like going back to like the level of what's our ultimate goal and what are the layers below it of what will get us there. And then it gets down to the basic level of building relationships, providing value, events, content, et cetera. So it's sort of this lead and lag measure pyramid of KPIs that says we'll get there, but we can't read that until the end. So let's look at all these things that contribute. Yeah, I'd say if you've got people that are inviting others back and that they keep coming back, then you've got something. Nobody's going to invite somebody to an event that's not worthwhile or anything of that sort. I say, look, if you keep getting people returning and they keep referring others in, then you got something to continue doing. I think measurement is valuable, but sometimes I see more people putting more measurement in like NPS scores than just doing the work. And especially as someone who's lean on leverage, I'd rather continue building the flywheels that are successful, even if it means that I might be slightly askew in a couple of things that I do.
Yeah, I mean, my one thing is like from your perspective, you could arguably, which I'm not going to speak on whether or not you're doing investing, but like my first encounter with you, I thought you were like one of the head investors at your shop, because like my assumption is like a lot of the deal flow is coming into you at this point, right? So how as a platform person have you gone between balancing the two?
I think in terms of like getting to the point where deal flow is coming from me, or balancing like logistically how I manage deal flow versus how I manage the other stuff that I do.
Yeah. Also thinking about filtering deals and things of that nature.
Yeah. Well, I want to be at the point where we're getting every opportunity that we can. It takes time. I think a lot of VCs want perfect deal flow to come into them. It's like, awesome, but our job is also to get paid to source it out and to scour it. I think it's one of those things where you just have to put the time in. Mm-hmm. But I mean, every time a founder wants to send a deal to me, I put it through to our deal flow process and I give people an opportunity to look. But the way I do is like, I say my KPI is like generating goodwill. If I'm doing things that are valuable that people appreciate, the goodwill is going to contribute to the other things as much as possible.
Makes sense. So I guess last thing is any advice you have for anyone else on that front to get started? Like, was your first event, like, what was that like? Like we hosted, well, not we, I did like a very small Confluence thing in New York, and I got like 5 or 6 people to come and like by planning it like less than a day or so out. And I was thinking like, maybe like the next time there'll be 10. Like, what was your first event like? And how'd you get that to grow?
I mean, my first event was when I did the community curated by personality, and I had 8 of my closest friends come to a basement in Flatiron Hall in New York. And I loved the feeling I got from being there. And so I kept doing it. I kept inviting more people. You know, the next event was 12, then the next was 17, then 22, then 25. Went down a little bit, and then I realized, okay, I got to keep doing this. I kept iterating, put some rules in, some other things, and it took me about a year and a half before I felt like I had my own momentum where I could just invite the people I had, and I kept getting new people coming in.
Oh,
So I'd say it's when it comes to community building, you got to be patient. Like some communities will blow up, but some could take a year and a half to get to the point where they have their own momentum. Give people ownership, especially if they want to get involved. You'll need it later on. And I'd say one big thing for people in venture is build something that can transfer with you. It's a value, a flywheel. Right? I guess 2 things. One is build something that travels with you. If you stop working for your fund or the fund shuts down and you get nothing out of it in terms of something that continues on, then you've got a lot of inefficient work. My community, everybody knows me. It's my face on the email, or my face, but like my name on the emails every time they get it. I've got 1,000 VCs, 1,000 entrepreneurs, 200 portfolio company founders that all know me. So always make sure that you can have something that transfers with you, because 1, then it'd be more valuable. 2, I would say lesson learned, always apply for new jobs just to keep yourself in the market and to make sure that you're appreciated. Doesn't mean you have to take any new jobs, but just make sure that you know what the market is. And then 3, I would say, is think about flywheels. It's easy to do a lot of things that are sort of one-off experiments and whatever, but if you can do something that continuously at least adds to one flywheel, then you're making progress. My KPI isn't the number of people on my subscriber list, but it's the people that I keep in the loop. Every event I host is more people for that. Every person that I meet is someone for that. It's like that's a flywheel where I see everything is building in a direction. There's still momentum if you know how to capture that flywheel properly.
Got it. Yo, Clay, you actually that was beautiful advice. But Clay, you want to run them through the bullets?
Yeah.
The last-
Yeah, that was awesome. I know we're running close on time here, so just want to close out with quick questions. This may just be like 1 to 2 sentence responses. So first question we had was, what's the worst part about venture? It seems like everybody that you talk to in venture only tells you the rosy parts of it. Want to hear from insiders what the worst part about venture is.
Yeah, get creative because we're gonna rank these at some point. What are the worst?
I would say it's both the best and the worst is the people. It's such a relationship situation that if you're with amazing people, there's nothing more refreshing and fantastic. And if you're spending time with people that either, you can't get in the room with them, they're just not supporting your development, it's the worst thing. So it's so human development. It's not a thing like coding where you can just build it on your own in the beginning. You have to learn some things and figure it out. I've seen so many people leave different firms and different stuff because they haven't found that right person to work with. So I'd say it's the best and the worst is the people, if you find great people or not. And I'd say the other thing is maybe just the surprise of how much work it takes. But again, that's what you sign up for. VC can seem like a really easy job for people who aren't in it. The people who need to run their own fund or do what they need to do to not sort of rest on their laurels, it's a ton of work. You got to love it.
Yeah.
Yeah. There's literally always something to do.
It never stops because it's like,
I don't think a lot of people on the outside always realize. So next question, really quick, what's the best piece of feedback you've ever received, whether that's within venture, before your time within venture? Do you have anything top of mind that kind of rings true there?
Yeah, I'd say the best positive piece of feedback and the best negative piece of feedback I got in terms of how it helped me. The most helpful negative piece of feedback I ever got was that I was a bit of a robot. And this was back in my teaching days where I was so focused on the practice of what I did that I didn't take the time to really get to know my fellow teachers and all of that. And it made me really, it brought me down a lot because I'm somebody who cares a lot about relationships, and I got so focused on the goal of the success. And so it made me really cognizant of all the people I was around and how much I supported them. And the best feedback I got was from one of my, and just in a couple of different occasions, we had been in meetings and I advocated for them and saying, hey, you have a lot on your plate. What do you need? Here's this thing for you. Here's that. And the feedback that they gave me was just like, I feel heard. And I feel like that was just what I needed today. And that was the best part, because I think no matter what else happens, that person and I are always going to be close colleagues because we just know we have each other's back. And that's the kind of calm and happiness that you get at a deeper level than anything else.
Wow. Yo, I actually, I'm going to cheat here. Clay, you might be mad at me. I got 2 questions for you. One's an opportunity and 2 is a question. First one,
Cool.
I'd like you to give you space to just shout out any 2 people or 3 people, even just one, if that's what you want to do. Outside of your parents, because that's a cap, like that's way too easy. Who's made a huge impact in your life as a mentor, or someone who's like changed everything for you, or just like passively been great to you.
Yeah. I mean, one of them was Joshua Siegel at Rubicon Venture Capital. Literally every time I needed his help, he was there and said, like, I've got you, in a way that makes a huge difference. He gave me real feedback every time I needed it. And he was the kind of person who just support, period. Smart guy, shared everything. He wanted you to succeed, even as somebody that he was just mentoring. I can't go into all the context of all the things he's helped me out with, but he's been the most helpful person that I've had, and probably the closest person I've had to a mentor before.
Got it.
Then I guess technically he's not at Rubicon Venture Capital anymore. He's renamed to Acronym Venture Capital.
Got you. Well, feel free to shout someone else out. And if not, just any closing advice from us or any acts from us as well.
Be true to what you believe in, know what you're good at, and do the work that feels good. And always make sure that the things that you do for other people are truly generous and genuine. Don't ever do it in a takey way. Like, you got to love helping others out if you're going to do it. And if you have other VCs that want to figure out how to navigate VC, I'm happy to help them. So that's about it.
Cool.
That's awesome. I think that's all we wanted to cover. Again, Mike, this has been great. Really appreciate you taking the time. I know you are a very busy man, so appreciate you giving 30 minutes of your time. We really enjoyed talking with Mike, and we hope that each of you were able to pick up something valuable from it. For next steps, if you're an investor and have not already signed up to join, we encourage you to check out our website at www.confluence.vc to submit your info to become a member. If you have any feedback for us, please feel free to reach out directly either to Tyler at gpv.com or myself at clay@muckercapital.com. Hope to hear from you all soon.